Visual, a slow, wide drone shot of a sprawling, chaotic garment district in Dhaka, Bangladesh. The sound of thousands of sewing machines humming in unison. The color palette is warm, dusty, and grounded. Every year, the United States spends roughly $900 billion on its military. That is more than the next 10 countries combined. To pay for the stealth bombers, the nuclear submarines, and a global network of 800 military bases, the U.S. government borrows an astronomical amount of money. The story you have been told is that this debt is a domestic burden. That the American taxpayer foots the bill, or that wealthy Wall Street bankers and domestic retirees are funding the military-industrial complex. But follow the money, and a much darker, mathematically bizarre reality emerges. The most expensive, technologically advanced military apparatus in human history is not just funded by Wall Street. A massive foundational pillar of American military supremacy is financed by the poorest people on the planet, by garment workers in Bangladesh, by copper miners in Zambia, by farmers in Vietnam. They do not do this voluntarily. They do not do it because they love American foreign policy. They do it because the architecture of the global economy gives them absolutely no choice. Visual, the camera slowly tilts up from the garment factories to the sky, transitioning seamlessly into the sleek, sterile glass towers of the Federal Reserve in Washington, D.C. And then to a U.S. Navy aircraft carrier cutting through the ocean. To understand the greatest magic trick in modern economics, you have to forget everything you learned in high school. Textbooks tell us that capital flows downhill. Rich countries have an excess of money. Poor countries desperately need money to build roads, hospitals, and power grids. Therefore, the wealthy nations invest in the developing nations, seeking higher returns. It is a logical, neat, and entirely fictional narrative. For the last 3 decades, capital has flowed uphill. From the poor to the rich. To see how this happens, you just have to look at how a single drop of sweat in a developing country turns into a microscopic fraction of an American missile. Imagine a developing nation. Let us call it Country X. Country X is growing, and its people need basics. They need to import energy like oil or natural gas. They need to import advanced medicine. They need tractors and microchips, but the global market is ruthless. Saudi Arabia will not accept Country X's local currency for oil. Taiwan will not accept it for microchips. There is only one currency that acts as a universal hall pass in the global economy, the United States dollar. If Country X runs out of dollars, the lights go out. The hospitals run out of supplies. The society collapses, so how does Country X get dollars? It has to earn them. It earns them by putting its citizens to work, producing goods and exporting them. It sells clothes, minerals, or agricultural products to the rest of the world, and primarily to the United States. The American consumer buys these cheap goods, and in exchange, dollars flow back into Country X. Now, the central bank of Country X has a pile of US dollars. This is their lifeline. This is their national security fund, officially known as their foreign exchange reserves. But a central bank cannot just put billions of physical paper dollars in a giant vault. Cash loses value to inflation every single day. The central bank needs to park those dollars somewhere safe. Somewhere that pays a little bit of interest, but where the money can be accessed the second a crisis hits. There is only one asset on Earth big enough, liquid enough, and safe enough to absorb trillions of these reserve dollars. United States Treasury bonds. Visual, fast-paced, rhythmic montage of cargo ships crossing oceans, digital stock tickers flashing green and red, and hands rapidly counting $100 bills. Slowing down to focus on an official U.S. Treasury seal, when Country X takes its hard-earned dollars and buys a U.S. Treasury bond, something profound happens. A Treasury bond is just a fancy term for a loan. By buying that bond, the central bank of a poor, developing nation is actively lending money to the United States government. They are taking wealth generated by their own impoverished workforce and handing it back to the wealthiest nation in human history. And what does the United States government do with that borrowed cash? It goes straight into the general fund. Money is fungible. A dollar is a dollar. The U.S. Treasury does not separate the money borrowed from a developing nation from the money collected through taxes. It all pools together to fund the federal deficit. And the largest discretionary expense in the American federal budget is the military. By hoarding dollars to survive, the developing world provides a continuous, massive supply of cheap credit to the U.S. government. This endless fire hose of foreign capital keeps American interest rates artificially low. It allows Washington to run trillion-dollar deficits year after year without instantly bankrupting itself. If the developing world stopped buying American debt tomorrow, the U.S. government would have to violently slash its budget. The global empire of bases would shrink. The aircraft carrier fleets would be grounded. The American standard of living would compress. The developing world is actively subsidizing the empire that polices them. Visual: a quiet, slow zoom on a political press conference. A politician is speaking enthusiastically behind a podium. The sound is muted. Text on screen flashes the total amount of U.S. foreign aid distributed. The irony of this system is deafening when you look at the public relations of global finance. If you turn on the news, you will hear endless debates about American foreign aid. The United States government proudly announces that it is sending a few $100 million to build water wells or schools in the global south. It is framed as the ultimate act of benevolence. The wealthy superpower lifting up the impoverished. It looks phenomenal on camera. But while the cameras are rolling, a silent, invisible tide of trillions of dollars is flowing in the exact opposite direction. Developing nations currently hold trillions in foreign exchange reserves, the vast majority of it sitting in Western financial assets. The amount of wealth extracted from the global south through this debt recycling mechanism dwarfs any foreign aid program in existence. Foreign aid is essentially the U.S. government handing $1 to a poor nation out the front door, while quietly taking $10 out the back door in the form of cheap credit. But you might ask, why don't these poor countries just stop? If the system is rigged, why play the game? Because they are trapped by history. In the late 1990s, the Asian financial crisis swept through the developing world. Countries that did not have enough US dollars in reserve saw their local currencies decimated. Millions of people lost their life savings overnight, poverty skyrocketed, riots broke out, governments collapsed. When those developing nations begged the West for help, the International Monetary Fund offered bailouts, but with brutal, punishing conditions that devastated their domestic economies. The developing world learned a chilling lesson. The global financial system is a jungle. If you run out of dollars, the West will not save you, they will strip mine you. So the central bankers of the global south made a collective, unspoken decision. Never again. They decided to hoard dollars at all costs. They decided to chronically underinvest in their own countries. Instead of spending their wealth on building domestic high-speed rail or state-of-the-art hospitals, they took that wealth and bought American debt. They bought insurance. And the premium for that insurance is funding the American military. Visual: archival footage of the 1990s Asian financial crisis, traders shouting on the floor, citizens protesting outside banks, fading into a pristine. Silent shot of the Pentagon viewed from above. But the system is not just a trap for the world's poor. It is a trap for the United States, too. To understand the endgame of this hidden mechanic, you have to look at the other side of the ledger. For the rest of the world to hold dollars, the United States has to constantly supply them. How does a country supply its currency to the world? By buying more than it sells. By running a perpetual trade deficit. To keep the global economy functioning, the United States